Hi folks, Lee Gettess here with the Market Sense for the week of May 8th, 2012. As always, the charts I use come from the Trade Navigator software. The first chart we'll look at is the weekly bond market, and bonds have been going up nicely for several weeks now, and they've actually gone up far enough that they're getting within range of the highs of all of this sideways that lasted for a good 6 months here. They should have held support at the red line here at roughly 143.08, and they haven't even been down there so far this week. The blue line is 44.16, well, 144.16, and they seem to be trying to work above that, which could lead them to these old highs above 145 here. It is kind of hard to believe that with interest rates as low as they have been, that bonds could go to new highs, but boy, they sure are looking like that. You know, they're up in this vicinity and they could turn down from there, but it really looks like they could blow out to the upside, and I'm not sure exactly what that would mean for the U.S. economy. But at this point, if they do turn back down, we've got the green line at 142.5. That's 142.16, or 141.12 down here at the red line. Both reasonable supports if they get to it. And, I'm still kind of thinking this sideways pattern remains in effect, but boy, the price pattern is just looking kind of scary here, like they try to go to the upside. So unless they roll over here, wow, that'll be interesting. Now in stocks, boy, a lot has happened since we talked last week. They decided they didn't like the employment report last Friday, and then they didn't like the French elections, and they got buried pretty good at the end of last week. They've been down in an area here which you can see looks like pretty critical support. The blue line is 1345, and the mid Keltner channel here is 1343. That area is strong enough that it was bound to bring in a bounce, which did occur on Tuesday. Now the question is, will that bounce continue up into the 1380 area by the green line, or maybe even up to 1400 or more? Or is it just a bounce? Because, boy, if they take this out, things could get really ugly quickly. There's really not much until they get down to this lower Keltner channel here, which matches this previous swing high that they broke out from way back here in 2011. And those prices are well below 1300. They're 1280 or so. So clearly there's a lot of room to go down if they don't bounce from here. Now again, some kind of bounce was likely. The question is whether that's it, or whether they can make a bounce to one of these resistance areas here at the very least. And listen, they could go to test the highs and even make new highs. I wouldn't expect them to rally to new highs, but possible marginal new highs anyway, I think are very possible. But the big risk is if they turn down. Once they take out these lows, boy, it could be a real waterfall decline down into this area. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for looking in on us.